Hello, everybody. So yesterday evening, there was a special event from Crowdstrike at their Fal.con conference, and they had an investor briefing, investor presentation, in which they gave us absolutely outstanding guidance, the type of guidance that I love to hear. That guidance is for now not 5 billion in ARR anymore, but 10 billion in ARR between 5 and 7 years from now. So annual recurring revenue, this is very valuable revenue. These are not one-time sales. These are recurring sales. And they hope to have 10 billion of those between 5 and 7 years. And obviously, I'm very bullish on the stock. So I think it's going to happen closer to 5 years than 7 years. And obviously, the stock was well in the red today because the market absolutely does not care about the long run. The market cares about next week. They don't care about 7 to 5 years from now. They really don't care. I can't believe this stock was down today after giving such incredible guidance yesterday. This Fed madness has to stop. There is more than just the Fed in life. Anyways, just wanted to put that out there. Insane guidance. Really great guidance. For real investors, like I think many of us on this channel, who care about the companies actually and not the price of money decided by an old man, if we care actually about the business, this is extremely helpful. 10 billion in ARR from 2.9 billion. Now, 2.9 billion, I was very surprised when I saw this number. And you'll see that really Crowdstrike downplays their number in their presentation because ending ARR is obviously trailing 12 months ARR. So they're telling us they're going to reach a trailing 12-month ARR of 10 billion in the future in 5 to 7 years. But look here. They gave us the higher number. They gave us the run rate. So this number, 2.9 billion, corresponds to the last quarter's revenue, 731 times 4, and you get a 2.9. That's this number, right? If they had wanted to kind of ingratiate themselves to us in investor presentation where they often do that, they would have used the trailing 12 month. They didn't even use the trailing 12 month. But actually, in my view, the proper way to look at this is that we're going to move from 2.64 billion trailing 12 month ARR to 10 billion trailing 12-month ARR, ending ARR, because that's what they guide here. And so if you do that, if you do the ARR of today, trailing 12-month at 2.64, and you project it 5 to 7 years forward at 10 billion, that would mean that the revenue will do a 3.78x. And this is what this 3.78x would translate in terms of returns depending on the period that you assume. Now, obviously, me in my spreadsheet, and I know this company. I mean, I've called this company for their bluff and for their sandbag guidance on multiple videos. I know Crowdstrike is one of the least watched topic on my channel, but go back and I keep telling that they are sandbagging. They keep sandbagging. So in my view, they're going to reach that in 5 years. So in 5 years, that will be Q2 2029. So they have a forward earnings basis, a forward fiscal year. They're ahead in their fiscal year. That's why the years, you have to always revert them back to what the calendar year for us is. So that will mean in August of 2028, 5 years from now, if they reach 10 billion, you would make a 30.5% CAGR. Right? 6 years, that's a 24.8 CAGR. And 7 years, if you're pessimistic in them achieving the guidance and you think they're not sandbagging, that's a 20.9 CAGR. And these CAGRs are obviously, you will earn, I mean, that's what the revenues will compound at, but you will earn this return on the stock if, of course, the stock is trading like it is today, trading at a 14.6 times sales. And really, that's if you want to know how this revenue, which is what I care the most on this channel, I care about top line on this channel more than anything else, because that's a true sign of product adoption. Top line can't be cheated. But then the market's going to apply a ratio, and you may say, oh, that's unrealistic, 14 times sales. Well, actually, I think assuming that stays flat is actually a fairly realistic assumption. I mean, even if you take between 12 and 16, that would still be realistic, right? In my view, that's somewhat realistic because it could increase, right? That price to sales could increase or decrease based on the type of forward growth that they'll be able to guide for us in 2028 and tell us in 2028. But let's keep in mind that right now we live in a period where the Fed is bluffing about money costing something. The Fed is trying to tell us that money costs something, and the Fed is in this big bluff telling us that we can afford as a country, as the whole world uses the dollar and the whole world is built on a mountain of debt, and well over 20% of the companies in the S&P 500 are built on a mountain of debt. We have a Fed that is bluffing, trying to make us believe that we can afford interest rates at 5.25%. Never mind that the US alone is going to have $9 trillion to refinance, right? They have about $5 trillion of debt that they have to refinance and $3 new trillion that will need to be issued, right? And China and Russia are not going to buy those bonds. They're actually selling them. So Q is coming back. This is a bluff. And in an era that is the new era, which is QE to infinity, which is what I believe in, right? That's why this channel is named Beat the Denominator. In this era, in the era of inexpensive money, because it's the only way we can go, in my view. In this era, the price to sales ratio could be much higher. And in fact, if we go back to 2021, we see this was a stock that was trading at 50 times sales. 50 times sales. Now, I'm not saying that it's going to trade at that 10 years from now. No, there would need to be a true catastrophe in the collapse of the dollar for it to trade this much based on forward revenue expectations. But I'm just saying that it's not unrealistic that this stock is going to stay around a 15 times sales. I really don't think it's unrealistic. So in my view, if you assume a price to sell that sells the same over time, that stays the same over time, your revenue and how your revenue evolves will closely track your investment returns, or at least that is my view and my expectations for the future. And of course, if you go back at when they're trading at about 50 times sales, they had 1.4 billion in sales in late 2021. So today, of course, the revenue doubled compared to October of 2021. The revenue doubled, and this is a stock that has more doublings in revenue coming. So when we look back in 2030, if you were to compare to the valuation of say early 2021, you would realize that this is a business that when it IPOs has had the potential, at the point of its IPO, had the potential to 10 times its sales. So this is an exponential asset. If you 10x your sales in 10 years, you are an exponential asset. And who is not to tell us, that they are not going to do multiple X times their sales again in 2028 and onward? Who's to tell us they're not going to do that? And so in my view, it's not that unrealistic to assume a flat price to sales going forward. It's really not. And if you look at companies, like much bigger companies right now in the software space that are trading at high prices and that have a high amount of recurring sales, right, of as a service sales. For example, just randomly, one company I looked at was ServiceNow. ServiceNow right now is trading at 14 times sales with a market cap of 114 billion and sales growth, circa 20% revenue growth going forward. Do we believe that this is a company that's going to be able to grow sales at 20-ish% in 2028? I have no issue imagining that. And so if that happens, I think a price-sales ratio of this level can entirely apply to this company. Crowdstrike today is almost a $40 billion company. Let's call it a $40 billion company for the sake of easiness here. It's a $40 billion company. Do I have an issue seeing this company being worth $120 billion in 2028, which would be a 3x from here? No. I don't have a single issue. And I will finish this presentation by showing you this slide of their view of the total addressable market as it is today. So today, and you can see Endpoint Security is what they're known for, right, at 19 billion. But we know that Crowdstrike has so many different businesses. And so their total addressable market is absolutely tremendous. And their new AI native security platform that they are marketing today, right, they estimate it to be about 100 billion market size. So keep in mind that this is when we say 100 billion, we mean that's the potential revenue that is to be made each year. This is a company that has 2.9 run rate, 2.9 billion out of this 100 billion potential pool of revenue that they're identifying. Well, of course, total addressable market are very imperfect metrics, and they tend to be very large every time the CEO presents them. But nonetheless, we haven't even scratched the surface as 2.9 million. In 2028, Crowdstrike, which is in my view the foremost expert in security right now, is the best expert when it comes to cloud cybersecurity. They estimate that to be $225 billion in 2028. So this is going to more than double again over the next 5 years. So we have a company with tremendous guidance that has upped its guidance, that has increased the range from 5 to 7, and that is showing us a total addressable market down in the future as an absolutely mind-boggling number. And therefore, Crowdstrike is one of my top 10 stocks, and I am very happy to own it. And this was an absolutely welcome news yesterday. I can't believe the stock closed down because the market only cares about next week. And you'll see this week, the market, it's all going to be inflation next week and waiting for inflation. Anyways, it's stupid at this point. This was not investment advice. This was just entertainment. I hope you were entertained. I appreciate your likes. Please subscribe to the channel if you haven't done so already, and come back to the channel. Like most people on YouTube, I have more people who come to the channel not subscribed than subscribed. I'm about 60% of people who come here who are not subscribed. So I really appreciate if you subscribe. Have a wonderful, wonderful day. Thanks for watching.